Hey guys, hope you're all doing really well. Look, I just wanted to run through an example that I saw on during the Asian session this morning. Unfortunately, I don't trade the Asian session. I generally trade the London session, so it's an opportunity that I missed. I am potentially thinking about maybe setting some alerts and perhaps maybe taking some of those trades during the Asian session. I just want to see that it is consistent before I start doing that. But anyway, let's get straight into it. I'm going to run through the ICC strategy, which stands for Indication, Correction, and Continuation. For those that are familiar with the strategy, feel free to skip this section. Excuse me. And we'll run through it. So for those that are new, what is the ICC strategy? Well, the ICC strategy is a trend-based strategy. So that means that price either needs to be in an uptrend or a downtrend. So what is an uptrend? An uptrend is when price creates a low, creates a high, creates a higher low. It's called a higher low because it's higher than the previous low. Price then breaks above this high, creating a higher high. It's called a higher high because it's higher than the previous high. So when we get that formation, we get the first phase of the ICC strategy, which is the indication phase, right? So this red section here is the indication phase, and that happens when we're breaking previous highs, when we're in an uptrend, okay? The second phase is the correction phase. So the correction phase is when price sells back down below our previous high. I'll also just quickly mention as well, when we get that indication phase, that higher high, we want to draw our level of interest at that high right here. So we've got a low, we've got a higher low, and a higher high. Then that's when we start drawing our level of interest. That's what I've always done. So then from this point onwards, we've now got the second phase, which is the correction phase, when price comes back below our level of interest and creates a higher low. Again, very similar to this right here. It's created another higher low, which means it's higher than the previous low. So those are characteristics when price doesn't break previous lows. Those are characteristics of an uptrend. So this is a really good sign, and we're getting ready to look to take an entry now. So once this correction phase, the second phase is complete, we're then scaling down. I will mention as well, when we're drawing this, we want to mark up our charts and focus on the 4-hour and the 1-hour time frame. It's really important that you focus on those time frames. It's very, very important. There's more strength in the higher time frames, which means more strength means there's higher probability trades when you mark up your charts on the higher time frame. It's paramount. It's so, so important. So jumping back, when we finish the correction phase, we then want to scale down to the 5-minute and the 15-minute time frames to again find the characteristics that support the overall trend. And the overall trend in this instance is the uptrend. So we're looking, when we scale down to the 5-minute and the 15-minute time frame on this level here, we're looking for higher highs or higher lows, or lows not to be broken, or equal lows, anything like that. That's really important. So then when price develops that sort of those characteristics on the smaller time frame and breaks above our previous level, our previous high here, our level of interest, that's when we're looking to take an entry. So we're taking an entry, we're putting our take profit at this higher high level. And for me personally, I also have a take profit level at the halfway point. So I've got one at the halfway point and one at the higher high that we created. And that's as simple as it is. So the complete reverse of that is what we call a downtrend. So when the market starts, we're looking for high, we're looking for a low, we're then looking for price to create a lower high. It's called a lower high because it's lower than the previous high. Price then breaks below this low, creating a lower low because it's lower than this previous low here. Again, very similar to the uptrend. We've now created the first phase, which is the indication phase, right? Very, very important. At this point in time, when we've created our high, low, lower high, and lower low, we want to draw our level of interest at that low, at this low right here. Perfect. So we've got all that in place now. Now the second phase plays out, which is the correction phase. Price then comes back above our level of interest that we've drawn. It doesn't break this previous lower high, creating another lower high because it's lower than this high. Very similar to this. It's exactly the same. So now we've got another piece of information confirming that we are on a downtrend because it's not breaking the previous lower high here, is it? Excellent. So we've got second phase done. We've got indication, we've got correction. Now for the third phase. This is when we then jump down or scale down to the 15-minute or the 5-minute time frame to again look for the same characteristics that support the overall trend. And the overall trend in this example is the downtrend. So we're looking for lower lows and lower highs to create further lower lows. And then what we're looking for here, the continuation phase, when price breaks below this low here, which is our level of interest, we then enter a trade. We then take profit or set our take profit level at this previous lower low. And for me personally, I always have a take profit at the halfway point as well. And that's as simple as it is. All right, guys. So with those examples in fresh in your brain, we're going to run through an example of when actually market was in a downtrend, but then it changed trend into an uptrend. So it went from a downtrend, so creating lower lows and lower highs, to then breaking a level, breaking the previous lower high, creating a new high, before then creating an uptrend. So I'll just quickly run through exactly sort of what we saw or the example I'm going to run through. So in this example, price created, or there was a high, there was a low, there was a lower high, there was a lower low, lower high, lower low. And this was all on the 4-hour time frame. I'm going to run through that example for you shortly. So what happened? Price broke above the previous lower high, creating a new high. Now, on the higher time frame when this happens, this means that potentially that the downtrend might be ended, and it means that maybe we could then potentially start creating higher highs and higher lows and continue that sort of formation. So this example that I'm going to run through is an example on the NASDAQ, and it was on the higher time frame. So I'll just delete all this. Perfect. So just like I was showing you before, we'll run through it together. So there was a price from, say, the last three days ago. I sort of don't really look at anything past 3 days. The rest of it prior to that is just noise and it's not really useful. We just want to use the most recent price action, in this instance, the last 3 or 4 days. So if we're looking back on the last 3 or 4 days, there was a high in the market, there was a low in the market, price then created a lower high, creating a lower low, then a micro lower, higher low here, then creating a lower low. So then on Friday, today is Monday, Friday price broke above that previous lower high. And we know that because we're on a 4-hour time frame. When price breaks structure, that means that price could potentially be changing trend. So going from a downtrend, creating lower lows, lower highs, to now potentially creating higher highs and higher lows, just like our example that we went through. So on Friday, price broke above this lower high, potentially meaning that we could be changing direction, going from a downtrend now to an uptrend. So this morning, I then thought that was quite interesting. So I drew this level from the Friday on the body of the candle. My preference is I draw my levels of interest on the body of the candle rather than the wicks. If you feel more comfortable drawing them on the wicks, then feel free to do so. I feel more comfortable drawing them on the bodies of the candles. It's just something I've always done. It doesn't really matter. You're not really right or wrong either way. At the end of the day, you are just following price structure, which is the most important thing. And the other most important thing is drawing these levels on the higher time frame. It's so important. So knowing that we've now broken this this previous lower high, creating a new high, this means that potentially we are in an uptrend. So then if we scale down to the 15-minute time frame to start with, we can see that my level of interest, which is drawn from the 4-hour time frame, is this level here. So I know that when we came into the day, which was 6 p.m. UTC -5, which is the New York time zone. I trade the New York time zone because I've just always traded the New York time zone. We know that it's 6 p.m. That's when the market opens. So if we're to zoom in here a little bit, knowing full well that this level here is the 4-hour level of our level of interest. This is the indication phase, which is the first phase of the ICC phase. Price then created a correction. Again, guys, this was on the Friday night. So all of this happened Friday night. Price then did come back above this level, didn't break previous highs. It wasn't breaking previous lows. So that signified to me that potentially there might be more buyers in the market than sellers. So if we're scaling in here, the market opened up, it created this low and it wicked out all of these people that probably had their stop losses, hoping that the market was then potentially going to push to the upside. So we can see just from pure market structure and looking at the body closure of the candles, price makes basically equal lows. It does wick out the this low here. But if you're looking at the bodies of the candles, which is something that I do, and I look at the wicks, I look at the bodies, but I'm just trying to get a really good understanding of who is in power. Are the buyers in control or are the sellers in control? Who is the most powerful person in this instance, or who is the most powerful in this instance? So we could see that price wicked out, right, creating this massive wick, which then means that there's obviously buyers in the market. We zoom back in, we can see price then breaks this previous high here. So that is again characteristics of what we consider to be an uptrend. So we've got equal lows, that's clue 1. Second clue, price breaks above its previous low on the 15-minute time frame. That's a good sign. Those are signs of an uptrend. Price then comes back below our level of interest before then shaping back up again. If we then scale down to a 5-minute time frame, we can get a better idea of this. So we've got a point in time here. We've got a point in time here. Price breaks above this level, which is an indication on the smaller time frame. Price then comes back below our level of interest before breaking up. Now, the reason why you may notice these little blue arrows, that's just to sort of help me, because sometimes I have too many lines on my chart and I sometimes get a little bit confused. So if that is helpful for you guys, feel free to do that. You're just essentially adding, it's this little figure. I think it's the number 6. So if you press Shift and 6, it will produce these little upward arrows. I made them the color blue and I put them at the bottom. So I know that above this black level, which is drawn from the higher time frame, in this instance, the 4-hour time frame, I know that when price gets above this level with conviction, and we've got characteristics of an uptrend on the smaller time frame, I have the utmost confidence knowing that price will have the potential and has more probability of breaking to the upside compared to the downside when price is above this level, because we know we've created the indication. So we know that anytime price is above this level, price has the potential to be bullish. So when price comes back above this level again, after creating characteristics of an uptrend, we know that we can be confident in taking a trade because we've marked it out on the highest, or one of the higher time frames, which is the 4 hour, which is the ultimate strength. The 1 hour is just as good, but the 4 hour is the strongest level. You want to sort of use those in conjunction and see whatever looks best, trade from that. If the 4 hour looks better, trade from the 4 hour. If the 1 hour looks better, trade from that. But the most important thing, guys, is that you have to trade from the higher time frames. That is the most important thing out of all of this. Then you apply ICC, creating that indication, creating the correction, and then looking for the continuation when price is above the level that you've drawn out on the higher time frame. So if you were to look at this, then you could have price broke above this level here, creating a higher high. Price came back below a level of interest. That's when you then could have looked to take an entry here. Price obviously didn't come back below this level, These are all really strong signals and signs that we are then confirming that buyers are in control. Now, in terms of targets, what you could have done is you could have had your first overall target here, and you make that a bit thinner. So your first overall target could have been this high here. I would have then, so overall target here, I would have then had a partial at the halfway point. I always take profits at the halfway point between the entry and the overall target. That's just something I've always done, and I probably will, learn to let my trades run further as time goes on. But if we were to then look at what sort of risk to reward that was, probably, guys, because I know that this, if you come to look at charts long enough, you know that this is very much it's a complete fake out. I would have, if you wanted to be more conservative, you could have put your stop loss below here, or you probably could have put your stop loss here. I know for a fact that this is just, I know what the NASDAQ does. It does fake people out. So if you wanted to be conservative, you could have put your stop loss below this swing low, which is a very conservative way of doing things, and that's perfectly fine. I myself am a conservative trader, and this would have been a risk to reward of not great, almost a 1.4. Ideally, guys, we want to get that up to a 3-to-1. You can maybe just get away with it on a 2-to-1. So I probably would have, in this instance, if I know that I was wanting to get a good risk to reward, I would have probably moved my stop loss below this next swing low. So taking entries at this level here and then targeting the overall higher high. If you wanted, guys, you could have let your trade run a little bit more and trailed your stops. Or if you just want to hold the trade, whatever your risk appetite is or whatever your preference is, then you have to follow that. You have to just do what you feel comfortable with to begin with. And once you get more familiar with something, then that's when you can look to, trail your stops further. Oh, sorry, not even trail your stops, just let your trades run and go for, your ultimate targets. So say, for instance, if you wanted to go for the ultimate target, which would be, so say if we're looking here, the next ultimate swing high was this level here, which is also a 4-hour swing high. So you could have then put your targets all the way up here and let your trade run. It's going to be interesting to see how this does play out. I tend to be in and out relatively quickly. I don't really hold trades overnight. So my preference would have been just taking profits at this top swing level here. But that's it, guys. That's all I wanted to run through. And also, just that really helpful, drawing, just to sort of confirm that we know that this arrow, these blue arrows, mean that above this level, that's when we want to be looking to take buys. So if you're looking on any of your time frames and you know that you've drawn your level of interest from the higher time frames, this could be really, really useful. Feel free to use that on your charts, and if it's not helpful, then take it off. I'm just testing it out for the moment, and it looks very aesthetically pleasing for me, so I'm going to keep it on and just see how it goes. I don't want to confuse anyone. I just want to ultimately make your trading experience as easy as possible, and so that you can digest the information as easy as possible as well. But that's it from me, guys. If you like the video, please give it a thumbs up. And if you want to see more content like this, please do hit the subscribe button. I'd be very appreciative. And thank you so much for your time and all the lovely comments that you've been sending me out. They're really positive, and it makes me want to continue to make content and continue to journal this trade and see where it takes us. All right, thanks for your time, guys. Have a great night. See ya.